right, guys, this is going to be a fun, curated conversation. We got kind of all colors of the rainbow when it comes to investing, private equity, angels, M&A, and even mindset of the entrepreneur prepared for an exit. So we're going to go down the line. I'm going to let these gentlemen introduce themselves, give a little blurb about their background, their company, and what they do.
Hey guys, I'm Bruce Verga, and I have a company. I'm the CEO of Title III Funds, and what we do is equity crowdfunding. So what we look for are startups or growth-focused companies looking to raise $5 million and above, and we bring them onto the platform. We are looking for investors to invest in these companies, and you have a year to raise $5 million, and then you can do it again. So it's just basically marketing to the general public to invest in your deal. You get customers and you get investors with the same dollars. So equity crowdfunding.
Awesome.
Gentlemen, Brian Franco, Meritage Partners, an M&A advisory firm. So what you're going to hear up here on this panel is a variety of investment vehicles. We help our clients navigate through this process, help them choose, which options are best at that moment, what options may be better in the future. So when you think about us, we're essentially conduit to capital, whether that be capital be debt, or whether that capital be equity. And looking forward to spending the time with you guys. Thank you.
Cody Jefferson, I'm not going to stand up because my height will not change.
Sure, words are nervous.
No. Yeah. So I work with a few VC firms, typically on executive orders with founders in the scale process to exit on the interpersonal and mental health side, solving the questions money doesn't.
Powerful.
I'm G. Levitt. I'm not going to stand up because I'll make Cody feel even worse. And you guys already know me, so.
Tech for equity and private equity.
I'm going to stand up. I'll keep the trend going. My name is Neil Sahota. First, I'll say I am super jealous of you guys because none of these programs existed when I was much younger. And I will tell you that I started my life off as an entrepreneur, made every mistake you possibly could, but I learned a lot. Today, I live on the other side of the house. So I'm actually on the investor side. So I'm personally invested in 60 companies, part of a couple of angel syndicates like the Tech Coast Angels, but I'm also part of 5 different VC funds around the world. And I helped the UN actually create and launch its Innovation Factory program, which is a program to help social impact entrepreneurs.
Wow.
Nice.
My name's Kerry Ransom, and I would say I identify as a serial entrepreneur. I've done about 10 startups, and a couple years ago decided to, instead of one at a time, I would try to do parallel entrepreneurship and started what we call Venture Studio, where we often are first check into really early stage founders. We provide capital and provide hands-on support and take them on that venture growth, rapid rise. And so we're in about 20 companies right now and having a ton of fun. So happy to share any and all experiences today.
Beautiful. Good panel or what? Yeah. All right, good panel. There's going to be a time for you guys to ask your questions, so make sure you write them down. I mean, this is a vast wealth of knowledge right here and experience. So now is the time. This is a safe container to be able to ask those questions. So I want to start off and just say, what kind of deal is it that you actually look for? And we'll start here and I'll kind of bounce around. So what's the ideal deal that you're looking for?
That's so I would say that personally we look for where software and data intersect. So most of my career, I grew up in retail, family business. Most of my career has been in the software industry. I got into the software as a service world back in the 90s where the term didn't even exist, and saw that, wow, this is an amazingly capital efficient way to grow businesses. And most of my life has been what I would call automation software and not intelligent software, which Neil would definitely know the difference. And so we're seeing this trend now where data being used the right way can create much smarter and predictive and intelligent software solutions. And so the scale and the value that can create is enormous. So sometimes we see founders that don't even fully understand that, but they have a subject matter expertise, or they have something that we can then partner with them. So I optimize for founder first. So I look for lovable founders.
Say that again. Say that again.
Lovable founders is what we really look for. And lovable can be a lot of different forms, but usually that means they're coachable, they're collaborative, they've got a hunger and a humility that we can partner with. We're very low ego, but we know that we've learned a lot and stumbled a lot, and we don't feel like everybody needs to make those same mistakes. And so we look for those first in markets that are really rapidly, dynamically changing, and then where we can be that force multiplier by being involved. So that's really where we get.
Couldn't have said it better myself. We'll take it down here.
All right. Kind of companies I'm looking for, I think, would be based upon excellent founders with a story to tell, that they have a product or a service that they can tell a story to the public so that the public can understand what it's all about quickly. So with equity crowdfunding, the general public invests anywhere, $100 and up, and $50,000 typically. So you're looking for a story to be able to be told and something that they can get behind, and a founder that also understands that they're investing in the company, and they're also going to be perhaps a customer or an evangelist. So just looking for like solid companies that investors can make money with upon exit.
Beautiful. We'll go back down to Neil.
We look at things in a lot of different sectors and industry, but there's always three key things we're always checking for. First is what the company doing moving the needle. Means adding substantial value into our marketplace, whether that's an improvement or something new or innovation, disruption, whatever burst we're going to throw out there. Are you moving the needle enough? If so, great. Second, the founders, right? Your idea is like your resume, but it's about execution. And so what seals the deal is, do we believe in the team? This is the right team that's going to actually make this happen. And third, do we have the ability to enhance the value? Can we actually help the company beyond a check? Because we know in this day and age, money is important, but other types of help, even just opening doors to clients, providing some knowledge, like if you're a little bit weak in marketing or finance, is going to be critical to your success. At the end of the day, it's really more about people. And so we look for those three things. If they're all a yes, we usually want to do a deal.
Beautiful. Franco.
So, we don't have a lot of disqualifiers of, who we want to speak with, and when, we have touch points with clients throughout their business cycle, from earlier stage to recapitalization, whether bringing on, debt or equity or maybe mezzanine funding, and then also ultimately the exit. So what we really look for is, without having these disqualifiers, so to speak, is we want to engage in a conversation, understand the business, understand the direction where you're going. And as Neil was touching on, it really comes down to investors, whether you're earlier stage, whether you're developed, or whether you're ready just to exit for whatever reason. They're really looking at that team, right? And how you assemble that team. And because an idea is an idea. Like, how many times have you had an idea and the next week you see it on the market, right? You're like, gosh, okay. And so you just have to, I always tell myself, just because I have an idea doesn't mean it's always unique, right? It's just who's going to execute upon that idea the best, and sometimes that's first, sometimes it's not. But ultimately, we like to engage in those conversations and understand that what the business is, whether it be software, AI, engineering, manufacturing, so on and so forth. We're selling generalists, right? But we just want to have those touch points with you, help you guide you through those, through that moment in time of your business cycle. And there's different needs throughout, right? And so I think, as I described earlier, we're your conduit to capital, right? And I love what is being said on this panel, because you need to be coachable. If you know it all, you probably shouldn't be here, right? Because you're not going to learn anything. But if you can weigh in on our experiences, and you're talking probably, I don't know, over 100 years of experience up here, but collectively. But if you could weigh in on that, and Nick and I were talking earlier, I've had great business investments as an entrepreneur, even as an advisor. I've seen opportunities, but I never looked at losses as a loss. I've always looked at it as a tuition, right? Because I've always learned something. So if you can take our experiences, inject that into your business and into your mindset, I promise you, you guys will do well, whatever you do.
Beautiful, beautiful. G.
So I come in where technology and team are really the next step as opposed to the institutional round, right? So we're typically preparatory to somebody like, Neil, where we come in as co-founder, CTO of the tech company, build the first version of the product, and or we come in with team members that are missing in order to get the business to really a fundable state. And those are the majority of our deals as startup-y. Most of them are SaaS startups or fund startups. So a crypto fund, a real estate fund, a PE fund, a VC fund, some sort of fund of some sort. And then there's a small percentage of our deals, about 20%, that are just scalable SMB concepts. So let's say you had like a amazingly profitable donut shop. We would take that and make 100,000, 2,000 of those donut shops. That kind of idea. So it could be a franchise, could be a license, could be business in a box, could be a variety of scalable concepts that we would come in and build technology around that in order to get it to scale.
Beautiful. And Cody, I know it's not quite the relevant question for you, but why is it that VCs and private equity bring you in?
Yeah, so I mean, at this stage, I'm invested in 9 companies in various verticals, some brick and mortar, some online, some SaaS, some in the e-com space. So these guys bring me in simply because the rate of scale is typically quick. So we're looking at going from 150 mil to $1 billion in, say, 24 to 36 months. The amount of mental gymnastics it takes and the toll that it takes on you, on your family, on your kids, on your team, nobody is prepared for that. And so my skill set is to come in and be very objective without any emotional attachment. And so I come in both on a retainer and then typically with equity within the company. So that would be like late stage pre-IPO, or if they're just going M&A. And so I have a vested interest to see them obviously hit the largest exit that they can, because I have a very vested interest in getting the largest exit that they can without sacrificing their soul on the altar of that success. So that's where I come into play.
Beautiful. So we all love wins. We all love hearing about wins, but we actually learn more from the tuition, the losses. So take me through a time that you had a deal, you thought it was a good deal, and it didn't turn out to be one. And what was the factor of that? And I'll start with Neil.
Well, I could talk. I won't name companies, but plenty to choose from, unfortunately. We were actually looking at a VR company a couple of years ago. And we really liked what they were doing. They moved the needle, and talking with people is like a marriage, right? It's a marriage with some little friction built into it. But we went through due diligence, all the stuff. We asked them, are there any skeletons in the closet or anything like that we should be aware of? And they're like, no, we've disclosed everything, that kind of stuff, and hammered out the deal. We're literally about to sign the term sheet when we get word that they had a former CEO suing the company, right? And we're like, whoa, what's this? Oh, let's get some bad blood and this, and like, well, do you owe this guy money? Yeah, we owe him a lot of deferred comp. Does this person still owe shares in the company because they don't appear on the cap table? Well, yeah, but they only own like 30%. How does that make you feel, right? So we're saying like, I don't know if I can trust you.
Yeah.
Right? And we spent a lot of our own time, right, and our own money doing this to get to this point when we could have been looking at somebody else then. And they're like, no, it's totally okay. And we said, look, we'll be very honest with you. We don't want to do the deal anymore, right? One, right, you might use the money now for lawsuits and lawyers then growing the company, but 2, you're dishonest with us, right? If you'd been upfront with us to the beginning, it wouldn't have killed the deal, right? We probably asked some different questions. The deal might still have happened. And they're like, well, you're saying it's too late? And it's like, yeah. And that was a pretty hard lesson, I think, for them as well as for us. That thankfully, knock on wood, we saw that right last minute because of one guy just doing an innocent Google search.
Wow. So honesty, integrity, coachability, like all these things play into it. G, I'll go to you.
Yeah, I mean, we have 29 holdings at this point, none of which have fully exited and none of which have failed. So just put that up front as a disclosure. But the deals that we don't do, because we have similar experiences to Neil, are always related to the founders. So I'll just kind of leave it at that. Sometimes it's their lack of clarity, their lack of a plan, their lack of a strategy. They're not seeing something. And sometimes it's just their inability to sort of loosen up a little bit and let somebody else into the organization and take the coaching.
Beautiful. Franco.
We have a lot of war stories, right? But ultimately, I think the common denominator comes down to really timing, right? You build a business plan. That plan is designed to get you into the business and generating revenue. What typically entrepreneurs do not do is they don't build that exit strategy, right? You walk into a building, you're going to notice exit signs, right? If there's a fire, we know where to go, right? And not to say that you are only going to sell your business in a fire sale, but my point being is it really comes down to timing. And so what we found is that if they're not ready, they're not going to do the deal. They're going to talk themselves out of the deal at the closing table, and they'll find any reason. All they need is one, right? All you need is one reason to talk yourself out of a viable opportunity that, whether it's because you don't subscribe to the method in which the business is going to be, investment's going to be made into the business to accelerate it, to scale it. And maybe you can't see beyond the tip of your nose, but you need entrepreneurs and coaches around you that have been there, have done that, and can identify what it is you're experiencing, because it may be new to you, but to us, I mean, we've seen it over and over and over again, where it's I wouldn't say exhausting, but it's also it's
exhausting.
It can be, right? Yeah. But I think what breaks my I'll call it my business heart the most, right? My heart for business owners is that when they get down the aisle into an opportunity or with an opportunity and they walk away, it's just they weren't prepared, they weren't educated, they didn't on the topic, and they didn't subscribe to the vision going forward. And that may sound like a good reason at that moment in time, but you haven't seen the other side of that, right? And so you need to weigh in a group like this. Is certainly there's a lot of powerful experiences and mindsets here that can help you through that. But timing and preparedness, I mean, it's different for each of you, what it's going to take to be prepared, right? Some of it's going to be an age, some of it's going to be a revenue target. I mean, you have to choose that today, work towards it, but keep yourself accountable to whatever decision you make at that point or trajectory in the future. So
It's kind of like my don't fuck it up number, Yeah. Like get very clear on that. Carrie, I'll take it down to you.
Yeah, I mean, just to play a little bit, personal experience, my biggest failure was a startup that I did almost 20 years ago. Many of you guys have probably heard the term marketing automation. We started a company doing marketing automation before that existed, and timing was part of the issue. We were early, and as someone told me many years later, being early is the same as being wrong. And so timing is very much a key factor, but the reason that we didn't stick it out was that we had misalignment amongst, there were three of us as partners, and I was signing up to build a software company, and we had complementary skill sets, but we had very different worldviews. My partner that was building the software, I was the one going out and getting customers. He was a contract software company that was building software for other companies and was doing fee-for-service work. He was getting paid really what I would call labor arbitrage, where he had employees, he was billing them out at a margin and making money, and he kept taking them off of our project to go build them out because he could make money, and it kept delaying our software. It caused trust issues in our partnership, and ultimately we just couldn't get on the same page. And after about a year, I just said, I don't want to be in business with this person because we don't have the same philosophy of what we're trying to build. And so I think the real big learning for me in that was make sure everybody is really clear what you're trying to build toward, and just had the wrong partners. And unfortunately we were too early, we had revenue, we had customers, but we shut the whole company down. And I saw people that we were competing against in those early stages later become billion-dollar companies, and we just missed it by having the wrong partnership. So that is one that I can tell you very confidently, even 20 years later, I draw learnings from on a weekly basis.
Yeah, so the word is commitment from an executive level. So our platform, we onboard companies looking to raise capital through the crowd. And in the beginning of the pandemic, e-bikes were a hot thing. Everybody had to have an electric bike, right? So I was really excited to bring a company onto the platform. We have because of this company and their lack of commitment, we have an 80% success rate. Otherwise, we'd have a 100% success rate. So I was excited to bring on the e-bike company. The CEO of the company delegated everything to their marketing guy. And during October, November of last year, they decided to spend all their money marketing to sell bikes, as opposed to marketing to bring in capital to raise their business. So I think it's executive level commitment kind of hurts. Now I'm looking for CEOs that understand what this is all about. We have a program for that. This is what you have to do, step 1 through 30. It's simple, but it's not easy, and it takes a real commitment. So if the top management's not committed, I'm just not interested.
Yeah, so I think that the biggest frustration that I experience and see, well, there are a couple. One is just your commitment to fear and stories, right? I was at dinner last night and I heard this at a table. There is an exponential opportunity for growth within one of the companies, and all we heard was stories of fear, lack of execution, and excuses, not solutions and abilities to solve problems. Right? You are the glass ceiling. You. 2, when you're looking for capital, understand that when you are investable and capital comes into play, the game changes. Because now it's not just the stress that you're putting on yourself to grow your company, which you can kind of manage and you can dictate and you can kind of discern where that stress is going to come from. And if you don't grow, you say, I didn't grow. I had these ambitions and visions. When somebody sows capital, large amounts of capital into your organization, now they have a vested interest. And understand, a $5 million company feels, looks, and runs very different from a $50 million company. And if you don't understand the vision of where you're going and you don't have the heart behind what you're doing, you can have all the strategy, you can have all the tactics, you can be in rooms like this, you can be surrounded with people who are set to scale. And if you do not have the heart and the passion to scale, if you don't have the discipline to scale, if you don't have the team around you to scale, you will fail. Period. And I've watched men and women burn their businesses to the ground because they could not handle the scale process, and they burn every investment bridge along the way,
including the greatest investment they have, which is themselves. Therefore, that's how it happens. So we were having this conversation out front, you started chuckling. How important is it for entrepreneurs to focus on enterprise value rather than like the things that we value, right? Yeah. So, and then we'll kind of go around the room here.
Well, I think to your point, it's different when it's your time and your money, and all of a sudden you bring somebody else in, because you're immediately, and I talked about alignment. You got to be clear, and what we have that conversation sometimes where I'll say, "Are you sure you want this?" Because it is going to change, and what we try to do is we say, look, there are really 2 key areas in the early stage. We get involved often pre-product, pre-revenue. We're sometimes tip of the spear, and we'll say you have an area of genius, which is why you have this idea, you have this capability, which is why you're doing this. My job is to keep you focused on that to almost 100%, because there's any of 1,000 things you could do, but you're really choosing to do this, and we have to believe that you're going to do it better, or at least good enough compared to everybody else in the world that you can win. And so we need to keep you as focused on that as possible. And so that's where the enterprise value is going to come from. And it usually is building a great solution to a problem and getting customers to adopt it, pay you for it, et cetera, right? That's where enterprise value comes from, is a great solution and people who are using it, paying for it. And so we want to keep you as focused on that as possible. And so then there are two areas around that. One is the area I call necessary, not strategic. It's the stuff that at times you may say, I might go work on that because I can be successful doing it, but it's not going to create enterprise value. If you totally ignore it, you could kill your business, like setting up proper policies and procedures and other things, but it's probably not on its face going to unlock enterprise value. And then there's the areas of enterprise value creation that are just not your strength. You may be great at selling, but you may not be great at building. You may be great at building, but you're not great at selling. So what we'll try to do is an honest assessment and say, okay, where are the gaps, or where do you need augmentation, and then how can we help you there? But ultimately, I look at it as it's all about enterprise value, and you're gonna get that through some fairly, at this point in time, fairly clear market standards that are out there. And so there are ways to be at the top end of that, there are ways to be at the bottom end of that, like the type of business, the type of revenue, and those things will change things like multiples, but ultimately it's all about that from where we sit.
Yeah, perfect. G.
From my experience, moving or shifting from the things you value, right, material things to enterprise value is mostly just training. And I think we've probably given the majority of that training in this conference. So that's just a little bit of a mindset shift. But sort of looking at it from a different angle, what I see in that shift is more like, are you willing to sacrifice everything? Have you really actually put things on the line? One question to ask yourself is, are you more invested than the investor that you're asking for the money from? And the only reason my tech company was ever successful is that I was 8 million deep before I even asked anyone for money, right? So if you haven't really sacrificed and given it all and put it on the line, I think that it's sort of a weird answer to that question, but from my perspective, in 5 minutes you can understand the value of enterprise value, the importance of it. But if you're not willing to throw it all on the line, you're just going to continually be there wanting to get your things. Are you willing to go broke to get rich?
Broke to go rich. Neil.
I love that quote, by the way. I'm going to work that in, G. Not today. I think this is a big question a lot of people struggle with, because when you first conceive of your idea, it's usually something you're experiencing, some sort of pain point, right? And you're like, okay, I'm going to try and tackle that. The thing is, you're thinking about that niche audience. In the investor world, we call this the lifestyle business. And there's nothing wrong with lifestyle businesses. The challenge is for most investors, there's not enough return in lifestyle businesses to make the investment worth it. So the question is, are you willing to think beyond just that little niche and look at the larger, more diverse, and more flaky and fickle market out there, whether that's B2B or B2C? It's unfortunately not for everybody, and that's perfectly all right. But then that forces you to really step out and think, okay, what am I trying to do here to create enterprise value? Because what I see, especially from a lot of first-time entrepreneurs, is they really focus on the product, right? They're like, I'm trying to build this great product. No, you're not. You're trying to build a great business. Building a great business is not just all the capabilities in marketing and finance and operations. It also means that I got to be able to service my entire market at some point. I might start off small, but how do I handle that? Really, I'll tell a real quick story. There was a startup. They built like a STEM toy, like an inventor kit. They did some focus groups, that kind of stuff. But like the instruction manual was like a comic book, and their tagline was "Inventing Inventors," right? And looked good, but I'm like, you guys are missing a lot of stuff which they didn't get. And so we stuck them into an NHS program. And they absolutely got destroyed because the first thing they had to do was go interview 100 customers. And not say, hey, you like my product or like this, right? And so their value proposition was, hey, we're gonna help your kids learn STEM skills, get good jobs, that kind of stuff. It's a toy for 16-year-olds. And the first 10 parents they talk to, they're like, that's great, but I don't really care about educational toys, right? I want my kid, if I'm spending $50 on a toy, to play with it often. And they're like, those people don't love their kids. Talk to their 10 parents, same kind of feedback. Third set, and they're like, what is going on here, right? I thought one mom put it really great, which is like, if I'm gonna buy a $50 toy, it better keep my son occupied long enough for me to do the laundry uninterrupted. And that's when they realized we don't actually understand our own market, right? And they came back to me, is this what you're hoping we would learn? I'm like, yes. They're like, how did you know that we didn't understand the market? I'm like, it's real simple. How many of you guys have kids? None. So it's a different mind shift going to enterprise value.
Franco, same question.
Well, thinking about that, and just the value proposition was they were really looking for a distraction, right? And for their children, right, to keep them occupied. But I like to try and find the common denominator. Look at the conversation that we're having here. You hear these stories, and you see that at one point you were inspired, or you inspired yourself to not only have the vision, but to pursue the vision that you have, right? And that was both, it's emotional in some aspect because you were confident enough in yourself to take that and move on it and execute, right? But I think, like you were describing earlier too, you have to know, you have to challenge yourself, but you also have to know where you're valuable in the organization, right? When you think of the organization or the company as its own being, right, and you're part of that, you're an asset to that organization, whether you founded it, co-founded it, whatever the story may be, but recognizing the value that you bring to it, and staying disciplined to the vision that at one point you had, right? And but the next stage, the next level that you're hearing here is, are you going to get away of that, right? So during the pandemic, when we would take prior to the pandemic, we would take our clients on a roadshow. We would meet with investors, private equity offices, family offices, VC groups. We just didn't do that anymore. So our pivot was we created this show called Project Pitch. So I'll bring a client on and I'll interview them, and ultimately I call it a time machine. We walk into a studio, but I call it a time machine because it saves my client's time, it saves our time, it saves investors' time when they're looking to explore these investment opportunities. But one of the questions that I've asked in there is, and trust me, investors, they want to know, are you the long-term CEO? But investors don't want to ask you that, right? Because coming in the first or second or third meeting, and they ask you a question like that, you could be offended, you could be put off, or you could say, you know what, I don't trust this guy, he just wants my job, right? But ultimately, what you have to understand and subscribe to is that they don't want anything from you other than to continue to feed your vision and empower you to get to scale or critical mass. And so that question I ask on the show is, are you the long-term CEO? And the answers they're all over the place, right? But it's a very thought-provoking question, and it allows you to understand who's first, you or the business.
Beautiful, Danny.
I agree 100%. The corporation is what is the goal, and all decisions that you make are for the benefit of the corporation. There's a lot of sacrifice comes with that. Sometimes you just can't pay yourself, and you really have to think. If you have your own company, this is not about salary. This is really about your exit in 3, 5, 7 years, whatever it takes. You're going to get $100 million instead of $1 million a year. That's the mindset that founders have to be successful. So I guess it's really, those are the things. You have to really dig in, sacrifice, know that you're not going to make money now, but down the road when you sell. And also, when you get investors, don't waste their money. Think about if your sister-in-law is giving you $25,000 or $100,000, you're going to spend your sister-in-law's money on that. Don't do that. So just be careful in how you spend your money.
Yeah. Don't get seed capital and then go buy a Ferrari because it's going to be good for marketing. Yeah. Nobody likes that. But second, just to piggyback on this, don't let your enterprise value get trumped by ego, is what we're saying. You may be the founder of your company, and that's great, but as it scales, you may not be the CEO. And understanding, again, don't get married to your stories, and don't get married to your self-imposed identity. Okay, because you may be great at founding a company that gets a valuation of maybe $3 to $5 million. The scale from there changes the game. And you may not have the scale. I was, 2 weeks ago, I was on a show that we're filming called Going Public for Entrepreneur. My buddy Josh and a couple others. And the company that I was consulting, they're just in a scale phase of going from 20 million to 80 over the next 12 months, right? And then from there, I mean, they're looking at a 5-year valuation of $5 to $10 billion in the tech space, tech for education. These are not the guys. That doesn't mean that they don't have a position in the company, but that means if you want to get to where you've never gone, you're going to need to bring in outside perspective that has been there. So don't get married to your position now or think that because you're the founder of the company that you are the one that's going to lead the charge to exit. You will be a part of the conversation, obviously, right? But it may take, again, you superseding your ego so that you can boost the enterprise.
Beautiful, beautiful. You guys getting some value from this? Awesome. All right, so I kind of told the men at the table that we subscribe to this IV equals EV, and I've heard like a common theme. It's like the ego, the entrepreneur, coachability. Like, how important is the entrepreneur? That's the question in building enterprise value. I'll start with G.
Well, you bet on the jockey, not the horse. So I would say the entrepreneur is the entire investment. Because the business will change, it will shift, it will pivot, the strategy might shift. How many of you have pivoted your strategy already a little bit? So it's like 92%, right? And you guys aren't even like right next to the exit yet, right? So it's, you bet on the jockey because of that, because there are gonna be pivots, so you bet on their ability to make them.
Okay.
I don't know if I have anything to add. I agree. I mean, there's definitely a little bit of a trend in the world this venture studio world that I live in, that people think you can kind of construct these companies and sort of hire people in. I'm not subscribed to it. I'm still building as the core catalyst the founder, and that we need somebody who's just going to take it to the end, and we're going to try and help them do it as efficiently, time, capital efficiently, but I'm still fully betting on that. We're toying with the idea of doing some company construction, but it terrifies me, I'll be honest, because I think that the entrepreneur is critical.
Yeah, I think early hire is a really hard thing to get right. And so the founder has to have the vision, has to be able to have a co-founder or somebody that you hire in, and be able to get that person on board with your vision and stick with it, because they're not making a lot of money in the beginning, but the dream is there. So you really have to get really good people in the beginning and incentivize them and keep them on board with you, because they're the founding team. Everything that they're doing, everything that they're believing in is going to multiply into the next set of people that come under them. So I think it's the entrepreneur who has to have it and has to be able to make it resonate with their team and have a strong team in the beginning.
Cody.
I mean, entrepreneurship is kind of the backbone of this entire country, right? It's why we love doing what we do. My consideration is every day asking yourself, like, who do I need to be today? Right? This is why IV is so important. This is why the interpersonal value is so important, right? Like, how do you see yourself? How do you respect yourself? How do you talk to yourself? How do you carry yourself? What does your family look like? What do you look like, right? What are your core values, right? What is the vision for the company? What is your vision for yourself, right? Again, when we talk about who we have to become in order to fulfill, again, I'm a spiritual guy, so I'll say the call, but also just to fulfill the purpose of this endeavor that you're creating, right? The IV side is absolutely imperative, right? Because you are the foundation, right? Again, we can talk strategy, we can talk tactics, we can talk capital, we can talk all of those things. We can talk early hires, we can talk late hires, we can talk exit strategies. But if you lack the passion, if you lack the identity, if you lose yourself in the building of this process, right, then the foundation is gone. You are the foundation. You are the foundation.
100% be these guys. Entrepreneur is the crux. It's going to make or break the company, because whether you're an investor, you're a business partner, you're one of the first employees, this is like a marriage. And they're all going to look at you and say, do I believe in this person? Is this person going to do what it takes to make this successful? And that's not just work hard and be persistent, all that kind of stuff, but are they going to learn lessons? Are they going to pivot? Are they going to make good choices? Do they know when to step forward, when to step back? Right? That's the key thing. And I'll share another quick story. You know, I'm originally from New York, and I was asked to, when I was back in New York for some other business, a friend of mine asked me to meet with his nephew. Right? So I met him on a rainy day in Starbucks, and he had just quit his job with the Yankees to start an online sports proposition betting business. Thinking like, how much you know about that? And he walked me through and the passion, all this kind of stuff. And I wound up talking to him for like 3 hours. And I walked away from that meeting realizing that this guy may succeed, he may fail. There's lots of variables, but this business is not going to fail because he's a poor entrepreneur, right? And I, obviously helped a lot of people, helped him, but he has really been able to build an amazing team. He's learned some good lessons. He's pivoted. He's very coachable. But in 3 years, he's gone from literally an idea on a piece of paper to generating close to $30 million in revenue a year. He's built a phenomenal team. People go seek him out. They want to go work with him because he's that amazing of an entrepreneur. And so don't sell yourself short, and don't minimize how much you think you affect the business. Right? At the end of the day, I know we're doing lots of different things. There's nothing wrong with failing. Just don't let that failure be because you were a bad entrepreneur and you were inflexible or uncoachable.
Woo, woo. Some mic drop moments up here. Franco.
So the question was, how important is the entrepreneur? And I have two answers. And the first, I agree with everyone up here. I mean, and the two answers come in two different buckets. I'll place them. The first bucket being, if you're looking for investment capital, you are everything, right? 100%. But if you're looking for an exit, right? That exit may be by a strategic buyer. It might be a larger competitor. And at that point, you're not as important to them on a go-forward basis as much as your legacy of what you built and why they're buying what you built, right? And so those are the two answers that I have for you guys. But ultimately, it just depends, which sandbox are you playing in, right? Are you raising capital or are you exiting? And you, at that point, if you're exiting, you have to be okay with it, and it's difficult, right? To step away from something that you poured some of you more than everything, right? Even your friends and family's everything. And but if you can exit and you succeed in that way, the hard part is then disconnecting because you're really passing on the baton. But that's a legacy move. And as I grow older and as I have more kids, which I think I'm done.
You have so many.
I have 4 kids.
Ellie's not in the room, so you can say.
Yeah. But that's the second part is you may not be important to the business on a go forward. If it's a big check writer, you're part of a roll-up strategy. You're part of some sort of vertical that they already have. So there you go. Yeah.
Can I make one comment?
Sure.
It's such a good point he makes, and that's why Cody, does what he does. And I don't mean to make this a pitch about Cody, but the truth is, how do you go from being the most important person who all the investments ride upon, and then the very next day, you're garbage, right? You're literally thrown away in the exit as just someone who's going to sit over there in that corner on a 3-year earnout, right? And that's the mental shift that he helps people. That's the chasm that he helps people cross.
Yeah.
Yeah, and I was sharing with these gentlemen, I just met them, but I shared with them my story about a great exit and the dismal one, right? The dismal one where I was forced to exit. And I told them that my self-worth went down with my net worth because I had the two attached. And they weren't really attached in that way, right? So that's really important. So you can see the clock back there. I got 5 minutes, and I do have one question after this. So try to keep this brief. But when they're going to raise capital, like where the fuck did they start? And I'll go with Neil first.
I'll try to keep it brief. Don't just go anywhere. Do some research on the fund or the angel syndicate and see what they actually invest in. Right? I have two buddies that started a $2 billion healthcare fund. And out of the woodwork, all these people are coming up. Can you connect me with those guys? And it's like, how much money are you trying to raise? $500,000. It's way too small for them. So just do your homework on the fund. What's their average deal size? What sector, industries, verticals, the whole 9 yards. So you're using your time efficiently on who to engage.
Awesome, Franco.
Well, there's no shame in my commercial right here. This is what we do. Right?
Bring it in.
Yeah,
Elevator.
This is exactly what we do. So, I mean, just to set the table, if you're an investment group, your fiduciary responsibility is with your investors, right? So you have to watch over that money, make sure it's invested and creates a return. My fiduciary responsibility in the work that we do is with you, the entrepreneur, right? So we help you navigate through the process. In a perfect world, people are already knocking on your door. And they're saying, we're interested, we want to talk to you, we want to make an investment in you, or we want to acquire your company. In instances that doesn't happen, or even if it has happened, we run a parallel process to help you almost through this process of elimination because if you have one offer on the table, it's easy to get lost in it, right? But when you have 2 or 3 or 4 or 10 offers on the table, it helps you really build and develop your own expectation, which your expectations going into this could be very different as once you start seeing these offers, right? So that's what we do. Start with us.
And you will have an opportunity to talk to Brian at the speed dating round. Same question.
How do you raise money? So you put your own money in, for sure. You ask your friends and family. You have to. They're not going to invest in your company. They're just going to give you money because they know you. That's basically how it works. Do a convertible note, whatever. Equity crowdfunding is a viable option for a lot of companies. So you can raise up to $5 million a year doing one level of equity crowdfunding, and then there's other levels where you can raise unlimited amounts. Those are mostly advertising to bring investors into your deal. So once you get past that, you can continue doing equity crowdfunding. You could go to, at a certain point in time, probably go beyond that, and then you get money from VCs, and then, but with VCs, you're giving up some of your company and your decision making, and with equity crowdfunding, you're not. So I'm actually obviously a believer in equity crowdfunding. So, but you have to start with your own money, your friends and family, and just keep going from there, and maybe do an IPO.
Be okay.
Just to, I guess, add a little bit different take. My general view is don't raise other people's money if you don't have to. There are a lot of different ways to finance a business, and this is going to typically be the most expensive money you're ever going to take. Now, there are cases where it's the best option, it may be the only option, but understand what are you trying to achieve, and really start with that. It's like what the why and what are you trying to achieve, and it may logically end up with this is what I need to do, but don't start with that. The glamour of raising tens or hundreds of millions of dollars is generally not worth what the reality of that is. I mean, the reality is it's going to be mental toll. It's completely changing the ride that you're going to be on. It's what I love to do. So I actually, as I grew up in a family business my dad sold a couple of years ago. It was 146 years old. It was the same business for 146 years. And so there are a lot of different ways to build a business. There are a lot of different ways to do it. Get clear about what you're trying to do, and having a good advisor, somebody that can help you understand some various options, I would say start there and don't just immediately start knocking on VC or private equity doors unless it's clear that there's a pattern out there that says, yeah, this is probably what we should do next.
Start with the deck. If your deck doesn't sell the entrepreneur, I don't think you will, to be honest with you. I mean, Rod's probably the only exception that I've ever seen.
Both parts of that.
Yeah, best pitch, worst deck. But what you have to really understand about the process is that most investors are going to ask you for their deck, for your deck before they ask for a meeting. And so you never get the meeting unless your deck is good. So if you don't start with the deck, nothing else matters. If you can't sell your company via your deck to your friend or your neighbor or to a perfect stranger, you should definitely not approach a venture capitalist. And if you have details about the company that are relevant that are not in the deck, you're totally missing it. I mean, literally 95% of these people are going to say, send me the link to your deck. That's all you're going to get. So if you can't put the sales pitch in the deck first, it doesn't matter who you're pitching.
Beautiful. So it's all about big deck energy, right?
Yeah, speaking of that, also know your lane. This isn't mine. Listen to them in this conversation.
All right, so we're going to open it up for questions in a second, but this is going to be maybe rather difficult. Just like one word to these entrepreneurs that want to scale and exit. If they had to take one word, it was the mantra that they're going to repeat to themselves over and over and over again. What would it be? If you have it, you can raise your hand. That will give us, okay, G?
Clarity.
Clarity.
Gratitude.
Gratitude. Woo!
Consistency.
Consistency.
Discipline.
Discipline.
Persistence.
Persistence.
We're going to go with game changer.
Game changer. It's 2 words, but yes, that's right.
Hyphen.
Oh, hyphen.
One word now. Check it out.
So give them to me again. Yeah, I'm going to save you for last, but give them to me again.
Gratitude.
Gratitude.
Clarity.
Consistency.
Discipline.
Persistence.
Game changer.
Whoa, that almost goes pretty nicely together. Do it again.
Gratitude.
Clarity.
Consistency.
Discipline.
Persistence.
Is a game changer. Those are words that you can live by. I just did this with our big mortgage company. We went through, we described what leadership was, and we found all of these words, and then I had them select 3, and I said, just repeat this shit to yourself over and over and over again, because you're not going to want to get out of bed at any given time. True story is, so Brian Franco is a multiple club partner that we take a lot of deals to. We took a deal to him, and arguably it was between $80 and $100 million. Right, that these entrepreneurs had to exit. Keep in mind, when I walked in, these entrepreneurs wanted to exit for $20 million. For $20 million, Franco's like 80 conservatively, could be 100 plus, and they're like, you know what? We're going to sit this one out. We're going to go. We're going to go to Cabo. That's actually a true story. We're going to go to Cabo. We're going to go for $250 million. We're selling that business. Guess what they're getting? 30. And as he goes, holy shit, that is an expensive tuition. A $50 million tuition, because they weren't clear on where they wanted to go. And even though they told me early on they weren't committed to that, they didn't know exactly what that number was. They couldn't get out of their own way. So this is sage advice up here. There were such good nuggets. The only thing is I'm curating and I didn't have my notepad. I wish I was taking notes, because I always want to be a student. That's one of the things that G and I pride ourselves on, is constantly learning and evolving so that we can go to the next level. Now, it is your opportunity to open up and ask questions. Yes, Mike in the front, if you have a question that's a general, or there's a specific person you want to ask.
I'm Brian. So I have a business. We're looking for a 9-figure exit in the next 12 to 15 months. We built a pretty profitable business. So I've flipped hundreds of houses, I understand. I go to a real estate agent and I close in 30 days. We sell $15 million multifamily properties. We close in 90 to 120 days. Yeah. Go talk to a car dealer and buy a car. Yeah. How the hell do I sell a business? What does that process look like? What do the time frames typically look like? And how do you always use a broker or somebody in the middle to kind of make that marriage?
Yeah. So our process, our engagements are 12 months, right? But the soup to nuts, in this market, in the way capital is flowing in the marketplace, I would say 4 to 6 months, the entire process from marketing the business, preparing the business, as G was describing the deck, your pitch deck. We couple that with this video recorded interview. So we distribute both when we go to market. And so it gives the opportunity. you got to adapt to the investor, right? Some want to read the deck, some want to go straight to page 48 and look at the historic EBITDA and the projections. Others will want to see who you are, what are you about, and they could experience that in the interview. So we have this multidimensional approach to reaching out to them. But what we do is early on is we understand. We call ourselves sharpshooters, right? We're not going to shotgun blast the market, because when you do that, you lose control of the data, you lose control of the information, and then you create what I call, what we all call, is a risk to your core business, right? If that information gets in the wrong hands, what's going to happen, right? So we shortlist, we use analysts, we use AI, we use a lot of different tools to help us understand who those people are, right? Because we were talking about earlier, a number of things, but I always say don't take the first check, right? The first check that someone's willing to write you don't have to take it, right? I mean, it's very, very appealing, right? Very, very easy to say yes to that, but you want to take smart money, right? Where the equation is, you don't want to look at this as you're giving up something, right? You want that 1 + 1 = 3 or 1 + 1 = 11 strategy. And if you could find that, then you're good. But 6-month process, soup to nuts, in this market right now, and a lot of analytics of your business and the marketplace, and we marry those together, drive the process.
Beautiful. Any other questions?
Thank you.
Any other questions? Guys, come on. This is pure gold here. Yeah, Larry.
Any advice on the dance between being the first employee hired CEO for two founders who want someone to take their idea and vision to the market, build a business around a product?
I think it'd be a great question for Kerry.
Yeah, I mean, I think it's a question of, can you get the relationship, can you get clarity around what the relationship is going to look like, and roles and responsibilities. That's if they're going to stay in it. Are they looking to hand it off and walk away? And if you're coming in as a CEO, you sort of know generally, you should know if you're going to take that role, what the general set of skills around the table need to be, and do those founders possess those skills? Are they going to possess them for just a season or two, and then you're going to be able to replace them? Can you have those kinds of conversations? Are you all on the same page about what you're trying to go build? I think those are some of the things I would be working to try to answer, and do some situational experience. Can you come in as a consultant maybe to start and do a try before you completely commit? There are a lot of different ways to step into it, I think.
And he invests in early stage, and you also have a product, so you guys might want to have a conversation in the speed dating round. Any other questions? It's pure gold up here. Don't take advantage of it. Anybody? Yeah, Mitch.
Okay, so I've had trouble actually getting even to the level of being able to send potential angel investors, VCs, a pitch deck at all. So I didn't know on your side, what do you like? A cold email and hitting up on social media hasn't worked for me. So what is the one thing that you guys are like, hey, they got me to me, and like whenever you see it, you're invested in it. So like, what's a key way for my future to be able to connect easier to?
I think the official answer is hire an investment banker, because they're going to take their emails before they'll take yours.
Yeah.
And Brian does that for the record, but that's the easy one-word answer, right? Is hiring somebody.
I spent 9 months and just like nobody.
Well, so you're talking about how to reach angels with your deck?
Yeah.
They all have a process on the website that you upload your deck and all of that.
Nothing. Like my return on is like 20% to even get anything back. Like, and I don't know if there's a glitch in their CRM or what, but it's been awful for me.
The volume's enormous. I mean,
it's over 1,000. Like it's ridiculous.
Yeah, I mean, volume's enormous. I just think of my own inbox, and I probably see at least 10 new pitches cold a day. Yeah. Right, so just imagine day after day after day.
I get it. They get burned out.
And so, my instinct is it's a story. Like the story doesn't hit. And so finding somebody to give you feedback on that of okay, what is it? But if it's a mismatch to Neil's point, you're sending this spray and pray. It's you're better off being really laser focused. The ones that warm introductions always help, and especially if I feel like the entrepreneur's already done some of the work and said, I see you're involved in this company. We're very similar on these elements to this company, and this is why I think that you guys could be a good strategic fit beyond just the capital. It's being much more strategic and thoughtful about it is definitely, because if I can see somebody's done some work, I'm probably going to be willing to give them a little bit of my time back. If I see they're just spraying and praying to me, then I don't feel as big an obligation. In fact, I feel sometimes burdened. Like, you just added more to my inbox, and I got to get through 500 emails today. That's painful.
Mitch, it's relevance, right? And to your point, right? It's hard to weed through all that. So the beauty is, we get intel, published or not published, but intel through conversations or emails, and we'll have investment groups tell us, Brian, we're looking for this geography, this industry, this size in terms of revenue, in terms of EBITDA. So we aggregate that data, and we're able to then filter through it. So once we learn more about your business, we can move down the funnel and be those sharpshooters I described. But if you're driving a shotgun blast, you're looking for the first check in my mind, right? And just by filling out forms online, you're looking for anyone's money, really, right? But you want to find that smart money, because if the money's smart to you, it's going to be a smart investment or a strategic investment from the investor.
Yeah. So we have feelings and we have facts, right? And your feeling is that you're doing all of this work and you're not seeing any return on it. The fact is you're shotgunning over 1,000 pitches and you've seen no results on it. So either your deck is broken or your offer is not investable. I mean, it's like we got to take the feelings out of it. And so why investing in rooms like this is so imperative to the fast forward movement and growth of your business is, one, we get to have humble conversations like this where you get to ask anyone on this panel and they'll look at your deck and they'll say, nope, you're not even ready, right? Like, you don't need capital yet, right? You're not at the point where we can invest in it yet. Like, this is not the portfolio we normally take on, right? So then you get the feedback that's why being in rooms like this and having personal conversations and having relationships built, I can tell you all of my deal flow comes from rooms like this and from recommendation and from conversations and from sitting down, right? And so, I would say take advantage of the next round of these kind of speed dating opportunities to listen, you can be completely honest with yourself, right? With where you're at and what you're doing, and you can still not be telling yourself the truth.
Dave, out of time.
So I'm speaking on the entrepreneur side.
Yep.
And having raised capital for 15 companies personally. And this question that he just asked, what is going on? I've published this information on the website. This is how I get my deck into the hands of partners up on these firms. And the reality is there's a lot of nuggets of information that have been told here. The first one he said was, I'm looking at a healthcare fund that has $2 billion to invest. And knowing that that firm is not a fit for your QR Realtor company, right? So you wouldn't go to that company. Doesn't make sense. But the answer is, whether you're trying to get a meeting with a potential client, a partner, KW Realty, or South Coast Angels, or Fred Wilson from UVU, he's the best investor on the planet for your deal. You don't know Fred. The right person to get you a meeting with Fred is someone that Fred trusts, that has made money for Fred. So you go to Jack Dorsey and you say, Jack, I need a meeting with Fred. So the first thing you have to do is say, how do I get in touch with Jack? Because Jack can get me a meeting with Fred. If Jack says to Fred, I need you to meet with this guy, guess what? You're gonna get a meeting with Fred. He might say, send me your deck. And you send him the link and he's like, that's a piece of shit, I'm not taking that. Or you actually sit down with Jack and say, Jack, here's what I'm doing. I really am interested in getting funding from Union Square Ventures, because they are the firm that actually can blow this up for all of these reasons. It's more than capital. It's actually the strategic value of having that investor in your deal. So whether you're trying to get a meeting with the buyer at Walmart or Fred Wilson,
It always works best to go through trusted third-party person who can make the introduction.
Bingo. Bingo. And that's what the time. And that's what these rooms are all about, is about access, right? And that's what we promised you. You could also do something that's very intuitive, is just fucking listen to me. And take the advice that I said on multiple calls, on multiple one-on-one calls, and be coachable and humble. I thought you said it was probably hurtful to hear, but you said humility and coachability, and I think you failed on both. And that's where I've always failed, is being humble and being coachable. And like Cody said, facts. Sorry, yeah, one second. Cody said facts versus feelings. Like, all right, well, something is broken in the equation. It's not my lack of effort, and it may not even be you. It may be the headliner, maybe the pitch, maybe this, or maybe just the spray and pray model doesn't fucking work. You take some time, you break down some doors, you ask for favors, and then you get in there and you keep swimming.
So just to put a bow on it, right? We all know the importance of targeting our market on the marketing side to go get clients. It's the same thing with investors.
Yeah.
So what you're essentially doing is not targeting the market, right? So it's just marketing 101, and you gotta think like a marketer on both sides. How do I get my customer, and how do I get my investor?
Can I just 60 seconds? It's what you and a few others said yesterday in the pitch tank. You're approaching this like the business owner as selling your product. You're not approaching this as a founder looking for investment capital. You're not pitching me in the correct way that shows me what I need to see to be able to make an informed decision. This isn't a no-brainer offer for me.
Beautiful. Was this valuable, guys? Nope. You can ask them in the speed dating round. You can ask them. You can ask them in the speed dating round.
What's that?
You can ask them in the speed dating round.
Okay.
Yeah. We got to keep this party train moving. Was that valuable or what?
Yeah.
Like having these real, raw conversations. All right, you know what to do. Let's honor these men. Let's honor these men. And then I'll give you further instructions after we're done. Hands on the dead. Who are we? Who are we? Who are we? Boom. We appreciate you, man.